If you're watching this video right now, then welcome. You're officially part of the Money Mind family. Don't forget to subscribe, hit the like button, and leave us a comment, because your opinion matters a lot to us. Our channel, Money Mind, shares practical advice on money management, business, and all types of investments, as well as innovative and creative ways to earn more income. And today, we're diving into a big question. What's the best investment in 2026? Should you put your money in the stock market, real estate, or gold as a safe haven? The problem. Why this is a tough decision. The global economy right now is anything but stable. Inflation, central bank policies, political uncertainty, and global conflicts all affect the value of money. The big dilemma is this. Do you protect your capital, or do you chase higher growth with more risk? Do you want quick liquidity or stable income? Option 1. Stocks, the growth engine. Historically, the stock market has delivered strong long-term returns. For example, the S&P 500 has provided an average annual return of about 6 to 10% after inflation over the long run. This makes stocks a powerful tool for building wealth. Advantages. High liquidity. You can buy and sell quickly. Diversification. You can invest across sectors and countries. Returns come both from price growth and dividends. Risks. Short-term volatility can be stressful. Sensitive to political and economic news. Practical tip. If you want a smoother ride, think about index funds, ETFs, and use dollar-cost averaging to reduce volatility. That's not. Option 2. Real estate. Stability and inflation. Hedge surveys show that many people still consider real estate the best long-term investment. Why? Because property values and rents usually rise with inflation. In fact, in many markets, rental income has grown steadily in recent years. In some cases, more than 5 to 6% annually during 2024 to 2025. Advantages. Provides regular rental income. Acts as a hedge against inflation. You can use leverage, mortgages to amplify returns. Risks. Low liquidity. Selling quickly often means lowering the price. Costs for maintenance, taxes, and management. Operational risks. Tenants, vacancies, and property management challenges. Real estate is often the choice for people who want stability and income rather than fast capital growth. Option 3. Gold, the safe haven. Gold had a huge surge in 2025, climbing above $3,600 an ounce. And many analysts now expect it could reach $4,000 in 2026. The reason? Global uncertainty, central banks buying more gold, and expectations of interest rate cuts. Advantages. A safe haven during crises. Globally liquid, easy to buy and sell. Risks. Does not generate regular income. Prices can drop sharply if the economy stabilizes or interest rates rise. That's why gold is best used as a say-I-might hedge, making up a small percentage of your portfolio, not the majority. The comparison. Stocks. Best for long-term growth, highly liquid but volatile. Real estate. Steady income, inflation protection, but low liquidity. Gold. Excellent hedge and store of value, but no cash flow. Practical recommendation. There is no single answer for everyone, but here's a balanced strategy many investors use. 60% in stocks or ETFs for growth. 30% in real estate or REITs for income and inflation defense. 10% in gold as protection against shocks. Of course, you can adjust based on your age, goals, and risk tolerance. Younger investors might lean more on stocks, while retirees may prefer more real estate or bonds. Final thoughts and call to action. So, where should you put your money in 2026? The real answer is don't put everything in one basket. Balance is the key. If you found this video valuable, make sure to like it, subscribe to MoneyMind, and drop a comment below. Which investment do you prefer for 2026? Stocks, real estate, or gold, and why? I'll be reading your comments and might create a full video responding to your ideas. See you in the next one.